Hey guys, Tim Melvin of Banking on Profits coming to you from down here in Central Florida on just another nice, hot, muggy, lovely day. I'm going to say excuse me up front if you happen to hear like a buzzing sound in the background. Last week was my wife's birthday, and much as she one year wanted a generator for our wedding anniversary, this year she wanted a power washer. And so far, the only thing around here that hasn't been power washed is me and the dog, and I'm a little concerned about both of us. But right now, she's right out under my office window power washing the porch. Um, I really hit the wife lottery with this woman, I have to tell you. I think she's going to do the sidewalk next, and she'll probably do the neighbors just for kicks. She's more of a Bob Villa than I am around this place, and she's out there working hard making the house pretty. But we may hear a little buzz in the background this morning. So, anyway, earnings coming out. We're about halfway through our bank portfolio earnings, somewhere around there, and they're fantastic. We're not seeing any real trouble spots in the portfolio, the bonus banks or the focus picks in the community bank stock investor. We're seeing really strong, solid loan demand, continued excellent credit conditions. And I keep thinking, gee, it's got to end someday, but today's a bad day. Conditions look great for the banks. Business activity is strong. Loan underwriting is still solid. Bankers are not doing anything stupid yet. So it's a great time to be an investor in the small community bank stocks. The only warning sign that well, there's two. First, and we'll touch on this a little bit more in a couple minutes, but there's just nothing new to buy. We're having a real hard time coming up with new ideas because even the teeniest of tiniest of banks are trading up close to book value. There's a couple that, kind of would like to put out as bonus picks, but they trade 3 shares a day. And you guys haven't shown a lot of discipline so far when we put these picks out there. So I tend to spring them on you as a surprise. And I also wait for, a few nice solid down days in the market. That's trying to develop on the weakness of the Facebook and Twitter earnings and all that. I don't even know where we are so far this morning, but that lack of banks to buy is mildly troubling. More troubling is that, every day, John Moreland over at Insider Insights, fantastic guy, great data, one of the best insider products on the market today. I know you're not supposed to talk about other people's newsletters, but John really does put out a great product. Looking over his list, I'm seeing more and more insider selling by executives and directors of very small regional and community banks. It's kind of going all the way down the ladder. That's disturbing, okay? Because, you see one guy sell, maybe he's paying for his daughter's dream wedding or a vacation home, or he's getting ready to retire, he's doing some estate planning. When you see guys at 10, 15, 20 banks, 25 banks during the course of a week unloading shares, that's a statement about what they feel about bank valuation levels. We're going to watch it. It's not a trigger, okay? But all triggers to us are down at the individual bank level, and I don't see anything that's causing us to lose any sleep right now with the portfolio. But we're not going to track it, and it gives us that little tickle at the back of the brain that maybe we're closer to the ninth inning than the first, and continuing to keep the tail hedge in place and build up cash balances is not the worst idea we ever had at this point in the cycle. We're still keeping up with beating the market by a little bit with the portfolio in spite of a very heavy cash position, so I'm pleased about that. And I do expect to see stronger M&A activity in the back half of the year as we get some new players coming into the M&A marketplace thanks to Dodd-Frank reform. So anyway, that's the outlook is pretty much unchanged. Everything, all engines ahead for the small banks at this point in time. Now, I run more than just bank screens. We screen a lot of different things, and it's kind of cool because, we run into those people talking about this new exciting strategy and this 2-hour trading strategy and this whiz-bang wonder stock and just all this crazy stuff people are doing. Trading between Facebook and Amazon and Netflix and trying to figure out which one's going to go up the most today and, trying to find the next Microsoft and all that just lovely fun activity. And just the plain old boring stuff. I mean, we ran a screen the other day and we tested it and we fooled around with it and just kind of went back and looked at every variation and time frame and ran rolling back tests. One of the most effective strategies. I mean, you compounded your money at 15% a year with very little risk compared to the market. Drew down a lot less than the market during the big sell-offs, and this is a cool strategy. Okay, you go out and you buy the companies that have greater than 25% insider ownership, that are trading below book value, and pay a dividend of 2% or more. And here's the hard part of the strategy, okay, because this is hard for most people to execute. At that point, you forget about it. You just don't even come back for 5 years, 10 years. And one or two of them go out of business, but on average, you compound your money at about 15% a year. And then there's strategies involving your price to book value and earnings, enterprise value to earnings before interest and taxes. That once you put a couple credit metrics in there and get rid of all the garbage and trash, they do extraordinarily well. I keep reading values lagging, but these strategies are actually beating the pants off most growth funds, and it's slaughtering the overall stock market return. So I don't know what they're talking about. We run those screens at least once a week. We have some core screens, and we've got some other core screens based on private equity replication strategies. Again, really, boring companies. Nothing exciting about these things, but they do very, very well. They have some years of underperformance, but so does everybody. Even the Yankees lose once in a while. But just plain old boring stuff beats the more exciting stuff in my experience. But our concern is, much like with the banks, the lists are getting shorter. Lists that would normally produce 20 or 25 names are producing 8 or 9. It's, again, not a trigger, but it's that little tickle in the back of your brain telling you, hey, things all could be getting a little pricey, a little toppy here. You might want to hold off putting new capital to work. Just take a little bit more relaxed approach about it. Prune your portfolio carefully based on the credit metrics. Make sure you don't have any potential surprises in there. We are getting a little long in tooth in this market. The number of opportunities is getting extremely small. While not a precise timing device, it has been my experience that when the opportunity set is shrinking, maybe we've got a pullback coming that's something of I like to call it an inventory creation event. I personally would like to see one. We're building up cash in the portfolio. My son is getting ready to make some changes with his retirement plan because he just switched jobs. So we'd like to put him in a great space at a great price. So pullback wouldn't be the worst thing that ever happened around this household. But anyway, last year we had a bonus bank, New Resource Bank, out in San Francisco. Real small bank, but it was pretty cool because they were lending on social justice projects, clean energy, just pretty cool stuff. Actually, they were kind of on the cutting edge of the culturally oriented banking. They got bought by the cutting edge of social justice or progressive banking, Amalgamated Bank out of New York, which originally started as a bank for immigrants and union workers in New York City. Today they're in New York, Chicago. Naturally, they've got a branch in Boulder, Colorado. And this gives them entry into the San Francisco market. It's a $4 billion plus in total assets bank, and they also have an investment management division that manages $40 billion, primarily in index products. But unlike most index funds, they are very proactive and even somewhat activist when it comes time to vote those proxies. So very interesting little combination bank. The problem with it, of course, it was not traded. It wasn't liquid at all. They registered the shares, so there was a little thin kind of aftermarket, but not much. I advised everybody at the time, we made good money, I think 60% in less than a year on the New Resource position. My advice at the time was, unless it's a meaningful part of your net worth, which would have been actually impossible, the thing only traded a few hundred shares a day, go ahead and take the illiquid bank, because someday they'd do an IPO and it'd be a more liquid market. Amalgamated Bank has filed for an IPO. Should you sell? No, you should not. I'll tell you why. They are the cutting edge of what I'll call progressive banking. Some of my more conservative friends would call it the social justice warrior banking. I don't care what your politics are, guys. This is a growing contingent and part of our society. People in towns like San Francisco and Boulder and New York and Chicago and Washington, D.C., where they have a presence, there are going to be people whose politics are very liberal. They're going to be attracted to the idea of banking with a bank who shares their values. That part of our population appears to be growing, much like the ethnically focused banks, which has treated us very well over the years. I think the values focused bank, it's a new idea, but I think it could do very well. This bank could see uh, some pretty decent growth, as well as being able to move in some areas where regular conservative bankers, like clean energy, might not have as strong a presence. I think this is a very cool bank. I don't share their politics at all, but they've proven themselves. That bank's been around since 1923. They know how to conduct basic banking business profitably, and I think they've got a niche that's growing. So I'm going to hold on to my shares, if nothing else, to read the quarterly and annual reports, because they should be a lot of fun and quasi educational to read. I'm going to hold on to mine unless the pricing in the IPO is just so egregious I can't stand it. I think that there's a market for this kind of bank. This bank dominates that particular market, and I think they could do real well in the years ahead. So I'm going to go ahead and hang on to my shares in Amalgamated Bank. Again, unless the IPO pricing is so ridiculous, I can't stand it. We saw those fantastic GDP numbers recently, and they were great, 4.1%. I mean, that's just a fantastic growth rate. I haven't talked to anybody that I respect or trust as an economist recently that thinks that number can hold. The more bullish of among my associates are 2.5 to 3%. I still look at all the forecasts coming out of the Fed, and they're still saying about 2% in 2019, 2020, and who the hell knows after that. We'll see. But I think that this comes back down to a more moderate growth rate. The good news is that it doesn't matter if I'm right or not, because whether we have 4% growth or 2% growth, those are win scenarios for us. That's win-win. That if we get a recession that causes a stock market sell-off and we get some bargains, well, that's a buy. So we are very much still in a solid win-win buy position in the portfolio, almost no matter what the economy does going forward. But at 4.1, that's got a real solid kick in the pants from tax reform, which is great. Regulatory reform has helped a bunch. I do not believe it to be long-term sustainable. But you know what? I'm not an economist. I could easily be wrong, and we get 4% for the next 2 years. That would be wonderful, because as bank investors will make a ton of money without M&A, but that type of growth would kick off a huge M&A cycle. So it would be very profitable for us. The book scene. Finished Franklin Gunn of Home Depot fame's I Love Capitalism. Guys, not only should you read this book, but if you've got a kid that's in college or last year of high school, this is one of those books that you give them and you make them read, because it is a love affair with capitalism. It's a manifesto of why true capitalism works. And it's highly recommended to kind of adjust some mindsets as the kids go off into the workforce and begin their grown-up life. Now, speaking of Franklin Gunn and capitalism, he introduced at the Alexander Hamilton Awards dinner earlier this year Stanley Druckenmiller, who of course traded for Soros and has had Duquesne Capital for more than 30 years, compounded money at about 30% a year. Guy knows what he's doing when it comes to investing. And he gave a speech on why we should try capitalism. And the automatic answer is, wait a minute, we're capitalists. What we've seen the last 3 or 4 decades is not real capitalism. It's more a variation of crony capitalism, with business able to really interfere with and direct, to a very large degree, government, and government interfering in all stages of the business and economic cycle. Mr. Druckenmiller makes a compelling case for trying real capitalism in this country that might actually get us to that sustained 3 to 4% growth rate that I know everybody would like to see, except for my friends at the Federal Reserve, because they wouldn't know what to do with interest rates at that point. If you haven't read the book, read it. Buy it for your older kids. They'll thank you down the road. The fiction side, Ace Atkins had a new one out in the excellent Quinn Coulson series. Again, another fantastic read. Really getting into the Gabriel Alon series by Daniel Silva. I read a couple from the middle of the pack. I think there's like 19 or 20 books in the whole series. So I've gone back and I've started at book one and I'm working my way forward. And this is a great spy series. This is as much fun as James Bond. I'm really liking the books so far. Now, in a different vein, if you liked Game of Thrones, okay, and that's an acquired taste, that kind of sword and sorcery fantasy. A fellow by the name of Scott Lynch has a 3-book series. I read the first one, going to be starting the second one here pretty quick, called The Gentleman Bastards. And this is very Game of Thrones like. Maybe not as violent or as lewd as Game of Thrones gets at times, but it is an interesting, compelling story with kind of cool characters. I'm interested to see where it goes. George R.R. Martin has done liner notes for all 3 of the books, praising Mr. Lynch's series, and I found it entertaining. And if you like Game of Thrones, I think you will as well. As always, I'm on Goodreads, Tim Melvin, and you can kind of keep track there with what I'm reading, what I'm starting, what I just decided wasn't worth finishing, and what I really liked. So you can follow me there if you'd like to. Now, baseball, getting really interesting this time of year, isn't it? Unless you're a Baltimore Orioles fan, of course. Machado's gone, Britton's gone, Brock is gone. It doesn't look like Adam Jones will get moved by the deadline. Dan Duquette said that would not happen yesterday in his State of the Orioles speech. He did commit to rebuilding, which means everybody's on the block if that's the case. Gosman, Bundy, Scope, why would you keep these guys? Got to go back and do what the Astros and the Cubs did. Clean house down to, well, we're already a terrible baseball team. I don't know how we could get much worse, but get a bunch of young guys, bring guys up from the minors, get new guys in the system, do a total rebuild of the organization. Takes 2 to 3 very painful years, which is why I am glad my wife is from San Antonio, so we can also claim fanship in the Houston Astros, and via my daughter living within walking distance of Wrigley Field, we can also root for the Cubs while we wait for the Orioles to get good again. So anyway, all the interesting races so far. I mean, the Yankees in Boston. Boston's got a 5.5 game lead. That's always a fascinating series. That's going to be a dogfight right down to the end, I suspect. But the other AL divisions, have clear leaders that don't look to be fading at this time. Races in the National League are pretty damn interesting. That one in the NL East with Atlanta and Philly, you can't count Washington out. But if they're going to make a move, they're 6 back. They better make it now. But Atlanta and Philly, in my preseason comments, I talked about them being very good young teams. But I really thought one more year. Nope, it's this year. These are great ball clubs, and this is a fun race to watch. The NL Central shaping up exactly the way I thought it would, a dogfight between the Cubs and Milwaukee. And Milwaukee's made some interesting adds here at the trading deadline. So we'll see how that plays out. They've added some power to the lineup. And then the NL West, I mean, the only team that's out of it there is the San Diego Padres. Everybody else has a shot with the Giants 6 back. So the interesting baseball right now is in the National League. The Dodgers, of course, got Machado, and I'm a huge fan of Manny Machado. I would love to see this guy get some championship rings. So it'd be nice to see the Dodgers make a run there. But it's going to be, interesting couple months here as we head into August. So even though the Orioles are terrible, it's still a great time to be a baseball fan. Now, guys, subscribers, big note. This is a normal week, okay? Regular update on Thursday for Banking on Profit subscribers, reading list for everybody on Friday. But then next week is a publishing holiday. The kid, my daughter's coming down with the baby and her husband. We're excited. Well, mostly we want to see the baby. Who's kidding? But my son's coming over with us. My sister's coming down from Myrtle Beach, South Carolina. We've got a nice beach house going over in Captiva for the week. Going to be a fantastic time. So I'm going to take one of my 3 or 4 little publishing holidays that I take when I'm able to get together with the whole family each year. If anything happens, if there's a takeover or big news or something that I need to jump in and tell you guys about, you know that I will be there and I will get that done. Otherwise, you're not going to hear from me next week. I'm going to be at the beach. We're a couple steps to the beach. We've got a pool at the house. There's a bar within walking distance for my son-in-law and I, Sanity. So I'll be in Captiva. If you're anywhere in the area, I'll be pretty damn easy to find. It's not that big an island. Stop by and say hi. Otherwise, you're not going to hear from me next week. I'll be back the week after with all the regular material. So, anyway, guys, have a great week, fantastic weekend. I'll talk to you guys. Oh, it's only Monday, fantastic weekend. Well, guy can dream, right? Have a great week, guys, and I'll talk to you guys in a couple weeks.